So I want to answer the question, are dividends still worth it when you run your own business through a limited company? And if you've been doing it for long enough, you probably realize there's a couple of different ways you can get paid. You could just take a large salary, or you could take a combination of salary and dividends, and or you might, in certain circumstances, just take dividends. And the reason I want to cover this is because gradually over time, the dividend taxes have been creeping up, but the taxes on employment, like national insurance, have been coming down. Although the most recent budget, employers' national insurance has gone up. So I'm going to start this off with some caveats. If you end up having to pay employers' national insurance on your salary because you don't have any employment allowance available, let's say like because you don't qualify for it because you're a one-man or one-person band, or you have utilised all your employment allowance, which is 10,500 in the next tax year, on your team, then a salary is going to get eye-wateringly expensive for you anyway, because you're going to be paying your income tax on it, you're going to be paying your employer's national insurance on it, and you're going to be paying some employees' national insurance on it. So in that situation, definitely always take dividends if your business is profitable anyway. But let's say in another scenario where actually it's unlikely you have to pay any employer's national insurance, then what you'll find is actually a combination of salary and dividend, and corporation tax and dividend tax rate. At the very lowest, it could be around the 26% mark in terms of the basic rate. At the highest, at the basic rate, it could be closer to 30 something percent, because depending on how much profit you're making, your corporation tax rate could be much, much higher. And in that kind of scenario, it's actually a very difficult one to tell. If you're at the lower rate of corporation tax, then what you'll probably find, and you don't have to pay employers' national insurance, you'll probably find that it's still better taking dividends. And the reason for that is your overall tax rate might be like 1% lower than if you're taking a salary and paying national insurance and income tax. But the other advantage is, like, dividend tax is like paid in arrears at the end of the year, so it's better for your cash flows, whereas your PAYE taxes are just paid every month. So but some people want to pay every month, so that might not be your issue. But if you're at the higher rate of corporation tax, where you're paying it at 25%, and then on top of that you're paying your dividend taxes, then you might actually find that a combination of salary and dividends is much, much more beneficial. But one thing I would say though is just bear in mind, when you take dividends, they affect your tax bands after you paid corporation tax. When you take a salary, that affects your tax bands before you've paid income tax. And what does that mean by that? You can actually earn more money as taking dividends and a small salary than you can earn taking PAYE income on its own, before you go into high rate tax. So that should also be a consideration. What I'm trying to say with this video is it's actually quite a complicated one, and it's something you should talk to your accountant about, or us about, because quite often it just depends on your very personal circumstances. Alright, I'll see you next video.